Well, the sector in focus, the stock in focus is Interglobe Aviation. It will be surprising to note that Interglobe Aviation is one of the world's best, in fact, it is the world's best performing low-cost carrier in terms of the share price return that the company has delivered in the last 18 months. The company has seen a jump of almost 68% as far as its stock price is concerned, whereas most of its peers have seen a decline of an average of 15% in the last 18 months. Now, when you're talking about Interglobe Aviation, today Goldman Sachs has come out with a very interesting note on Interglobe Aviation. At this point of time, Goldman Sachs is turning quite cautious as far as the prospects of Interglobe Aviation are concerned, especially when it comes to the kind of expectations investors have built in terms of share price return. And the other important thing that they are talking about is the fact that valuations, as well as most of the positives, seem priced in as far as Interglobe Aviation is concerned. So now what they're saying is that the aviation sector, you are talking about things looking a lot better. There's an opening up of economies. A lot of countries are opening up air travel again, and also when you're talking about the entire recovery from COVID, the number of cases have gone down significantly, giving a lot of confidence to go ahead and increase the capacity seating that the Indian government had actually put a cap on. Now, other than that, however, what they're talking about in terms of Interglobe Aviation for Goldman Sachs, the stock is trading at a valuation of 11.5 times FY23E EV to EBITDAR, which is a 20% premium versus the pre-COVID one-year forward average of close to 9.6 times. They believe that at this point of time, the stock is already pricing in most of the recovery post-COVID, and what they're saying is that it's also pricing in a bit of growth beyond while ignoring any potential disruption. Goldman Sachs is highlighting a few potential disruptions that Interglobe Aviation may face, and some of them are extremely interesting. Number one, you're talking about a new airline, that is an Akasa airline that's coming in. This can be a bit of a dampener in terms of severe competition that they may be forced to come up with. Also, the revival of Jet Airways is something that the aviation industry is looking forward to. The privatization of Air India may again prove to be quite large in terms of competitive sense as far as aviation or entire Indigo market share is concerned. Other than this, it's also important to note that oil prices are rising significantly, and this typically tends to impact the margins of most of the aviation companies. So in order to go ahead and see why exactly has Goldman Sachs downgraded the stock to a neutral from a buy stance earlier and reduced the target price, putting it close to 1,950, which is a downside of 8.5%. High valuations, competitive intensity going up, and we're also talking about oil prices going up significantly. On the basis of all of this, Goldman Sachs has turned neutral as far as Indigo is concerned.